Hello, this is Data Trader Pro with a nightly market wrap. This is actually a weekend wrap on the evening of Sunday, January 22nd, before futures open. It's a little after 5 p.m. Eastern Standard Time. Market will open in about 40 minutes or so, and I just wanted to do a very brief, if I can. I always say brief, but it usually drags on a little longer than that. Market update. You know, basically hopping right into it, this is the E-mini S&P 500 futures daily chart. We've been in range for roughly 12 consecutive sessions. There's been a little bit of volatility picked up in terms of trading range, but actual volatility is measured by the VIX, or rather implied volatility as measured by the VIX and other related indices like VXST are down as of last week's close. Really, you can see by the Bollinger Bands we're getting range compression. There was a breakout, widening of the bands. We're tightening up here. We're sitting right in the key moving averages right here. So the 8-day and the 20-day, 50 days down here, as well as support from this private, this last low area, prior low. Area. So if we go down, that's probably going to be support. But what's interesting about this market is it seems like it's waiting on something, but now the events that it's been waiting on are over. I think we're going to get a move, and I'll show you what that looks like in the block trade space. So basically, we've been sitting in range, going up, going down, range trading for the past 12 sessions, not able to break down. Every time we go down, we pop right back up. Every time we pop up, we drop back down to the middle of range. So it's a bit of an odd market, and I think it's driving a lot of people crazy. But I think we're about to get a move. We're on the cusp of a move in the next day or two, I believe. So I'll show you why I say that. All right, lots of block trade activity on SPY. We dropped, obviously. There was some buys and then some buys on lows, sells on the highs. Every time we drop, these are all late prints from back here, and pre-market, and also probably back here, late prints that came out. So, late prints are used as your line of support. So 225.97 area is your support on SPY. Okay, and then at worst your last low 225.61. But basically most of the trade, most of the volume is coming in here as support, certainly institutional volume. Okay, we came up on Friday around close. There was and after hours there was quite a lot of volume in terms of large SPY prints, 3.5 million on that one in after hours, after 5 p.m., 4:16 p.m. 226.72, same level here, 226.72, 73 area, millions and millions of prints. So 3.4 million, 3.6 million almost. What was the last one? 3.5 million. So 10 million plus in prints just there. So and prices above in after hours from Friday's close. So here's your support. A lot of trade came in. They may very well be sells from this rally up, but as long as price stays above them, you're going to have to definitely lean bullish. And certainly with the Bollinger Band compression, range compression that we've seen, get ready for a move, because we're seeing big prints in almost everything right now. Okay, similar kind of activity on, but less in terms of size, but that's normal for QQQ. These came in the afternoon. 123.26 level. Watch that on QQQ. After hours, we close the end of the day right at the same level as the print. So I can't give you it's going to break up, it's going to break down. We don't know. We're not in this business to gamble or play guessing games. I don't have a crystal ball. What I can tell you is large institutions traded heavy in these areas late last week, and they're expecting a move one way or the other. So we're going to have to just follow whether price breaks up or down. IWM has a lot of support, so drop down. There were late sells from the other day, and when IWM made a corrective move low, lots of blocks on the bottom. We posted that as a likely stick save live in the market, live on Twitter, and then lots more volume came in, millions of prints came in on the lows. So these areas, 133.66, 133.30, even are going to be support. Again, some prints that might be sells on Friday, but we're going to have to see. Certainly there's plenty of support down here, so we're going to lean bullish for now. I'll show you some other things. Also, DIA, a million print, which is actually quite big for the Dow ETF. Again, on lows, that's your support, is 197.05. The picture in volatility is we keep, every time we make a new low in VXX, I have to say that it looks like somebody's accumulating a rather large position, or maybe a few big players are accumulating a large position, but we keep dropping. Obviously, this is an exchange-traded product that's subject to a lot of negative roll yield because of the contango situation in the VIX futures. So this can just keep bleeding, even though somebody's trying to accumulate a large position. It'll bleed and bleed and bleed until it you actually have a volatility event, and then it'll be up 20% in a day. So, and we're keeping an eye out for that. But VXX is not going to turn the market all by itself. I can tell you that. Certainly even a million print on this isn't anywhere near the kinds of sizes and money levels we're seeing in the index ETFs. So we're seeing probably some corresponding sells in XIV, which is the inverse of VXX. Not a lot of activity, a bit of activity on UVXY back here at the $30 level, but obviously we're under that, and this was just subject to a reverse split. I can't remember if it's 6th or 7th reverse split in its history, maybe more, I don't know. A lot anyway. And so we can't judge the market based on blocks only and things like UVXY, which tend to decay and decay and decay into nothingness. Okay, so but the basic picture is we're seeing big prints on index ETFs. I'm gonna show you something interesting on our sectors page, which is the dollar UUP, the most liquid US dollar index ETF, and 2.5 million print. 2603 is the level. There was some prior prints, 1.25 million roughly, same level, 2603. 2603 in the dollar is going to be your very important level, because we've had a big correction in the dollar. We had a dead cat bounce up, and what you often get at a turn is a bounce up, a corrective move back, and then you get a move up. So will we get that? We don't know for sure, but it's looking like somebody's starting to pour some money in volume here in UUP, looking for a turn. Okay, so you're going to have to watch that. EM, also quite a big print, almost 6 million, 36.42. That's going to be your line in the sand for a rise higher. EFA, which is like a world index ETF, almost 3 million. It doesn't look very big, but it's almost 3 million. Because there's been a lot of prints on this. 59.39. So whether that's additional buying for a move higher or whether we're going to drop, the same thing with all the indexes. We're seeing range compression, a long flat consolidation, and now some big prints. So the warning here is get ready for a move and get ready to hop on whichever direction it goes in, because I think the market, whatever direction it breaks now, it's gonna be a significant move, I believe. I don't think we'll continue in range for that much longer, maybe another day or two at the most. So be prepared. Bonds, we called the bonds low at 117 roughly in TLT, high 116s, low 117s. We had a good pop up to the 123 area. We've had a big move down, and then we've had 1.5 million print, 119.94. So yeah, so I would look for another move up in the bonds, and if the bonds are moving up generally, although this correlation certainly isn't 100%, but generally the market will drop. So we'll see. We really don't know. We're getting a mixed picture. VXX and bonds look look bullish. Everything else look like they could be potential sells on the highs, but we're just going to have to wait. I don't want to take too firm a position in this market until I see which way it goes, because these long consolidations can produce a very sudden and violent move, and I don't want to get stuck on the wrong side of it personally. I'd rather wait and follow the move when the market reveals its hand, and I suggest you probably do the same at this point. It's a very tricky point in the market. Trading successfully is not gambling. It's about having an edge, and it's about using that edge to your benefit. And when things are not 100% clear to you, I suggest you stay out, save your money, and wait until things clarify. And that's exactly how I'm playing this. We called a low in the metals about 3 weeks ago. Large prints on the bottom. They're obviously off the charts now on GLD and SLV. And what we're seeing is obviously we discussed in a prior update that we were likely seeing sells, or at least profit taking, if not a full-on short. We've got our corrective move. We've got another corrective move up, and then we've got some reasonably large prints, not massive, but reasonably large prints up in this area. So we may have something, with the Elliott wave, people like to call an A, B, C correction. We may get the C leg down. And it should hold the prior lows if metals are to be bullish. If not, then look out. We'll see some new lows. But I think right now metals are in a bullish stance, regardless of what other markets are doing. They've been pushed down for so long that they're going to see higher. But I think what we'll see is an A, B, C correction, maybe down to the 112.50, 113 level on GLD, something like that. Silver, same picture. Let's see. Yeah, so there's our A, there's our B, there's our C, something like that, down to the 15s on SLV. That's my guess on what's going to happen. All right, energy, USO has got quite a few big prints in here. 1139, that is your line in the sand. Look for a pop up. If the dollar continues to stay low. I think these markets are, again, not 100% correlated also. I mean, they can go up with the dollar, commodities can go up with the dollar and down with the dollar, but generally over long periods of time, commodities are inverse of the dollar. So if the dollar is indeed bottoming, these may be sells and we'll go back down. But look for a break. 1139 on USO is your line in the sand. UNG, not a lot of prints on the bottom yet. Some decent sized sells on the last high. We had a good move down, a very healthy bounce from that, and some sells up here, and we're below that. No corresponding buys yet. I would wait for that before I would try another speculative long. We're still in the middle of winter. We will probably get more cold weather coming. These are not just 100% based on weather. There's a lot of supply and demand factors in there in the natural gas space, but I would avoid a long trade until I see some big blocks down, and they may be coming Monday. We don't know. Tomorrow, so we'll just have to wait for those. I'm not going to go long natural gas again until I see that. We went long around here for a nice bounce. So use the blocks. What you're really looking at is where large institutions are taking positions, and if you follow them, you'll be right a lot more than you'll be wrong in the markets. So okay, so put call ratios, just a very quick look. Getting into the territory where we can get a change in trend. Certainly OEX, which is the top 100 of the SPX, is quite low in terms of puts, so we might get a bearish reversal there. We'll see. Volatility ratios have come back into the middle of the range, so unfortunately they're not going to give us much clue right here. VX, VIX and VXST. So this is a short-term VIX. This is the 9-day. This is a daily chart. We said that we were going to get a volatility move down here. We did. but it's only come up to the top of the Bollinger Bands, and now we're below the middle of Bollinger Bands. We may have another visit down to the lower end of the range before we pop. We'll have to see. But, you know, again, range compression, Bollinger Bands are getting tight on a daily basis. These are the sorts of low areas with the VIX at 1154 close on Friday. You know, long-term averages in the 18 to 20 area. So, you know, these are well below, you know, long-term averages. Implied volatility has been low for several years now, obviously with the long-term bull market. But, you know, whenever we get into these low ranges, you can see it looks like it, you know, it's going to stay down, and then you get a pop, and then you get a pullback. Usually what you get in a move in the VIX to watch is you'll get a pop, and then everybody goes long, and then it has an entire pullback all the way to where it started. You know, almost 100% pullback, and sometimes even a new low. And then the real move starts, okay? So people get long here, then they get stopped out here, and then it runs. So, you know, just watch that space. You know, your prior high of 1320s, 1330s has to be taken out for a bearish move in indexes and a bullish move in volatility. But just watch that space. I believe that's it for now. I think that we've covered what we wanted to cover. Again, just as a wrap up, range compression in pretty much all markets, large block trades right where we closed on Friday in pretty much everything, in oil and S&P and NASDAQ and IWM. You know, so we're just, and certain sectors, and certainly watch the dollar. The dollar is going to be a big key to a lot of commodity moves in the next week or two. So we got large prints on UUP. Watch the levels we provided, and we'll see you tomorrow or the next day at the latest with another wrap. Thanks very much for joining. See you soon.